I think the beauty of this REIT is that it's well supported by the sponsor, and perhaps not everyone know about it, is that this REIT will be the only commercial REIT under the Lendlease Group, which means that we will be able to enjoy all the commercial asset that is available in the group, be it through the joint ventures or through the fund under managed or through the pipeline that they have or through the constructions mode that they have. So I think if you look at it, basically our growth is unlimited. We're looking at the development pipeline of around 110 billion of Australian dollars as of now, and also looking at the fund under managed of 38 over billion. So it gives us a very good ability to grow. So I think we are probably spoiled by choice, and we will be very selective on how what are the assets that is good for the REIT, and also and we have a lot of ways to actually grow through the support of the sponsor. Next, please. Okay, we have just announced our first quarter result. In fact, those that invest in us earlier perhaps already received the dividend yesterday, and which we have distributed 2.34 cent distribution per unit based on the first half of our financial year, which means the distribution is around 1.4% higher than our forecast number, and also 3.2% higher on the gross revenue and 1.6% higher on the net property income. On the property portfolio metric wise, as I have mentioned, we are 99.7% occupied, and the weighted average lease expiry was around 9.3 years, with a tenant's retention of 58.8%. Capital management, we managed to have a very low gearing of around 35.5%, with the weighted average running cost of 0.88% and the interest coverage ratio of 8.5 times. Next, please. I think the other interesting aspect of that we like to share with the audience is that besides managing the asset and manage to actually outperform what we have on the prior years in terms of distributions, we also focus very much on the ESG aspect of the business. And we happy to share with you all that we are actually ranked the highest and number one in the GRESB award, basically in the few category. Basically, we are number one in this Asia retail overall, Asia retail listed, Asia overall, and Asia listed. Some of our peers also in this GRESB benchmarking, and we are happy to share that we actually are the number one among the peers. Next, please. In terms of financial wise, as we have on the snapshot of our financial numbers, and we shared with you guys earlier, is that the gross revenue was around 3.2% higher, MPI 1.6% higher, and our distribution per unit was at 2.34 cents for the first half of this financial year. Next, please. From the balance sheet perspective, the NAV per unit remains stable at around 0.85 cent per unit. Nothing has changed drastically, so I will not go into much on that. Next, please. Likewise, nothing has changed much on our capital management position compared to last quarter, and even actually compared to the last financial year. So what happened is that the gearing maintained at around 35.5%, with the average debt maturity at 2.7 years, with the average running cost of 0.88% per annum, and the interest coverage of 8.5 times. We continue to actually adopt a very flexible debt capital management approach, with 100% of debt unsecured. And we also try to have this natural hedgings on our Europe as investment exposure. So we have 100% hedge on our Euro investment with Euro term loan. So in that case, that is to manage the exposure on this FX risk and fluctuation of this Euro dollars, which also in a way provide stabilities on our balance sheet. We have diversified lenders. I mean, we have more than 10 lenders that actually able to provide us the loan, although we didn't tap onto all the lenders. And we do have around 98.4 billion of uncommitted and undrawn facilities. Of course, these facilities are set aside for us in case we need it urgently or need something to be fixed and we need to draw a big sum of money. But if it's not, it's actually it's just something that we feel that it's just a backup for us. So also we recently have established a $1 billion MTN program in January 2021 to actually add in more funding options for the REITs. Next, please. On the portfolio perspective, we have already gone through first half of our financial year, and at this juncture, we only have around 2% of based on NLA and 6% based on GRI of the leases yet to be renewed. So the exposure and the risk of non-renewal is low, and it continues to maintain at a very manageable perspective that we can sort of manage the cash flow and also the distribution on an ongoing basis. And the occupancy maintained high at around 99.7%, and with a diversified portfolio of tenant space, mainly on broadcasting, which is 100% due to our Sky complex in Italy, in Milan, and also we have around 28% on food and beverage and 17% on fashions. Next, please. This is rather a static information, as everyone who is familiar with us know that our mall at 313 is sit on top of the Somerset MRT station, which is very well accessed by public transportations. At the same time, it's very use focused, and we are literally at the center of the whole Orchard Belt. We have 100% own the properties. The current occupancy was at around 98.7% with a view of 1.7 years. Next, please. When we continue to see positive momentum in terms of sales and visitations. On the quarter-to-quarter basis, there's an uplift of around close to 20% of the tenant sales from 42.6 million to 50.8 million. And from the visitation perspective, it moved up to around 12.4% from 6.2 million to 7 million. We continue to see a positive trend, and we believe that with the government plan to vaccinate the residents, this will continue to add positive to both the visitation and also the sales of the tenants. Next, please. On the occupancy perspective, on a quarter-to-quarter basis, we managed to up by around 3.1% from 95.6% to 98.7%, and we managed to bring in quite a good mix of retail and food and beverage concepts to the mall. Next, please. These are the brands that we managed to bring into the mall. It's a good mixture of F&B offerings and also fashions and local brands, and also some entertainment, which we have this integrated virtual reality arcade, which will commence business by end of this March. Next, please. Our asset in Milan is also very well located to the public transportation system. In fact, we are only probably around 20, I think 20 minutes away from the airport, Linate Airport, and also we are just probably a couple of minutes away from the train station, the metro station, and also the train station. And it's a freehold Grade A building and fully let to Sky Italia, which are 100% owned by Comcast Corporation. And Comcast Corporation is the world number one global media and technologies company, and rated as triple A by Moody's, which is actually even better than the Milan as a country in terms of the rating perspective. So it's a uh, quality uh, good quality tenant, which also means that it's actually a good quality cash flow to the REIT. Next, please. Okay, Sky is actually located in one of these areas, which is called Milano Centro Giulia district, which is one of these new business district in Milan, and is one of the well located uh, district, which is very close to Milan main district itself. And if you look at the map itself, actually you will know that we are very close to the Milan's city center, rail, the metro, and also rail connection, which is very close. And surrounding it, there's also a few several developments, which actually make the area very the future of this area very good in a way. And we continue to have further development, and the latest development that is going to happen is on the spot in number one, which they're going to develop into a new office grade A building, which they have already 80% let, and the current rent rate that they actually offering is around 320 square meter per annum, which currently when we let to Sky is only 175 square meter per annum. So in the case, you can see there's an upside on the renter based on what compared to the new development surrounding the area. And also there is close to it, there's the Winter Olympic spot for the 2026 Winter Olympic, and this is one of the spot that will continue to attract political and foreign investment to this area, given that is a location that is getting popular now. Next, please. So beside the two assets that we are talking about on 313 and also Sky Italia, we have another two investments that we are talking about. First of all, is a small stake that we have in GEM through a 5% interest in one of the fund holding GEM. And also, we do won a development contract from the government, which we were going to redevelop the Greenshot car park to a event space that we're going to attract a lot of youngsters to the area, given that we are partnering with Live Nation, which is the world number one entertainment company, which we're going to bring in a lot of entertainments and events to the spot. At the same time, we're going to create a very interesting hawker stores and also food and beverage kind of spot for people to come and enjoy the food and also the entertainments. Next, please. I think the key focus going forward will be mainly to position ourselves on how we want to look, how the look and feel of the 300 going forward from as a retail from a retail perspective. We continue to work closely with the tenants in terms of marketing campaigns to help them to boost sales and visitation. At the same time, we focus on maintaining a high occupancy and see how we can actually sort of change some of this tenant mix to sort of make it more interesting for our shoppers. And also we embark on this omni-channel strategies to sort of like first of all attract the right tenants to be in the mall. And secondly is to actually provide e-platform for some of these tenants that without any kind of e-strategies to sort of help them to promote and sales and product. We continue to fortify our position in Orchard Road as some of the Singaporean might know the government is going to rejuvenate the whole Orchard Road, and Somerset is an area that actually is designated for the youth and the youngsters. So it meant to be very lively and very creative, and that's why we are selected to redevelop the car park, because our concept and ideas of how we want to rejuvenate the area in, has been one that I think the government believe is very interesting, and it can actually transform the area to be very relevant to their plan of rejuvenation, the Orchard Road. So in that case, we continue to do that. We continue to make our presence to I mean ourselves to be uh, more influential at the area of 313, which I think that's what we are trying to do. I think we continue to also enhance the portfolio attractiveness through our growth opportunities, through either the organic growth, for example, that what we do, or the development of the site, what we will change the tenant mix and all those things. Also, at the same time, see any kind of possibility to acquire some high quality asset to bring into the portfolio to sort of generate a more stabilized cash flow going forward for the unit holders. And nevertheless, we will look into very proactive and also prudent cash management to manage the whole cash situation, to enable us to actually make good distribution to the unit holders. Next, please. I think with that, I finish my presentation.